Welcome back, YouTube. So I wanted to provide an update with the price action that we're seeing here with Dogecoin. And ultimately, what we talked about in a few videos ago about shorts kind of taking advantage here of the uncertainty in the market and when they typically like to strike and take position. So before we take a look at the charts here, I kind of wanted to just explain that a little bit more in depth. So if you are looking at a period of uncertainty or around a catalyst or whether or not that is attached to the momentum that's coming into the market. So for example, if you say the catalyst for the money coming into Dogecoin right now is going to be around the Doge one, the rocket, the moon landing, right? And if you say the catalyst is around the pivot of the Fed, right? We're going to say, okay, well, this could be the start of the bull run. Then you'll have a lot of investors, whether that be swing traders or the long-term investors coming into the market and say, okay, well, I need to take a position because I believe this is going to happen. This is a short-term catalyst. So this is why I'm going to move my money into the asset right now. And then if there's uncertainty around that, whether that be a delay in the Doge one, right, or a pivot from the Fed, then you'll see the adjustment in the pricing and say, okay, well, these investors will say, okay, well, maybe perhaps I jumped the gun and maybe I got in a little bit too early. Maybe this isn't the best price. Maybe there's an opportunity for it to go lower in this cycle here before the next bull run, because ultimately I know it's bad. I know we've talked about it, but it's a habit. People try and time the market. People want the best deal. No one wants to buy something at $1 if they feel like it's going to be 75 cents in the next week, or in a few days, right? They believe they can get a 25% discount. No one wants to overpay for something, right? That's how the market works. If they believe something is overvalued, for the most part, this is going to be your swing traders, and I believe that's where a lot of the volume comes in. But ultimately, we're staying in the zones that we laid out, and we are ultimately looking for that liquidity. This is something that's happened before in the run. So ultimately, it's kind of going to be where that liquidity is going to be, and whether or not these catalysts are going to get delayed, and that funds, those funds that came into the market for that short-term catalyst, whether they're going to leave for right now and they come back, or ultimately are they just waiting, or if the short-term buyers kind of just left the market and they're waiting for a confirmation on when this is going to happen before they continue their positions or position themselves to make their swing trade. Now, with that being said, if the volume is for the Doge One rocket, then yes, that's going to get media coverage. That's going to get a lot of information being pushed out there, and you'll see what you would call like a hype run or a big green candle. Now, a lot of these swing traders, especially the ones that are running now, if there's FUD or if there's news out that can just potentially hint at a delay, they're going to flip the coin or sell anyway. So these are people that are not long term in the coin. But so you kind of have to keep that in mind as well. If they're running now at the news of a delay, these are people who were just trying to swing and make a quick profit anyway. So that's going to affect the price if the volume is low. Volume is low across the board for Bitcoin, Ethereum as well. That's why you're seeing a lot of the sideways action. But you kind of have to kind of keep that in mind that these people were not long in the coin anyway. So hope that makes sense. We're going to take a look here at the chart. I'm going to pull it up and we're going to kind of just look at some evidence to the things that I just said, right? So I hope everyone is doing okay. We're going to take a look here at shorts first. Make sure everything worked. Matter of fact, let me change my banner so it looks a little better. Bear with me. Oh, that's no banner. Nope, also the old one. There we go. That's much better, right? Okay, so this here is the shorts, right? And we see that the shorts have been creeping up here and not even getting out of their positions for quite some time, right? We're at the highest point. We're about to challenge the highest point we've been at since early November, right? And this is coming off of some major short action that we've had back in like October. So what we're seeing here is the shorts are above the 72, the 200. We're approaching the 200-day average for the shorts, right? So this is quite a bit, right? What we're seeing here. We even had this 14-day bounce off of the 72 because they're rising so quickly. So what we're looking at is literally shorts getting into position to kind of take advantage of that FUD. It's ultimately how they're going to not necessarily make money, but it's the easiest way for them to make money, because if it's low volume and there's not much news that's going on right now, they have less risk of getting blown out of the water by a big candle, right? Because right now, honestly, if they said that, you know what, never mind, we're going to do the Doge one, everything's going to be fine, everything's a go, you'll see the biggest red candle you've ever seen in shorts, because they don't want to get wrecked, right? So they'll try and position themselves again once they believe the momentum for that catalyst is running out. So what we're looking at, ultimately, we're saying that it would be better if we consolidated in this zone up here above the 382, I believe. Really, this is 954. So this is 382 that we're in right now. So yeah, above the 382. That's what we're looking for, to consolidate here, to kind of build out that floor. And we have not had the momentum to maintain that. And what we're looking at is we're still in this 382 zone, right? And this is kind of where we talk about zone to zone. This is kind of where you grab liquidity. Floors turn into resistance. Resistance turns into floors. So that's typically what I was saying. If we were able to build a floor out here, then ultimately the top of the 382 would be a floor, and we kind of be able to bounce from there to grab liquidity. But because we're not able to maintain that, the 382 pretty much became a ceiling, and we started getting some rejections off of there. And now we're at the bottom of the 382 and using that as a floor. So ultimately, what I just said means that we're consolidating at a level lower, at the next level lower than what we were kind of shooting for. But that was always a chance. That's why I was saying that even if we didn't get there, if we can consolidate in the zone, that'll be better. That's why we had these long rejections here, because it was very important that for the people who, I don't know if it's shorts or institutions, but it was very important that we did not consolidate in the zone. You can see evidence of this in the long wicks on these candles. These are all push downs, right? It's very important that we didn't consolidate in this zone, because that opens you up to the 10 to 12 cent range. So I certainly wanted it below that, for at least for now. So that's kind of where we're consolidating at right now, right here at the bottom of the 382, and seeing if we're going to grab some liquidity from here. If you take a look here, you'll see volume has decreased across the board. You'll see some big movements here, but nothing really as far as shaking the needle. There's up, down volume here. The candles have gotten a little smaller. It's not this explosive movement that we've seen over the last few weeks here with like Doge, Bitcoin, Ethereum. So we're kind of just having this sideways action here, and these big, even with the push downs here, the buying action came in, but it wasn't enough to break it. It still ended up closing down for the day. And over the last 3 days, there's been very minimal price action. That's why these candles are so small and the wicks are so long, right? So it's been some push downs, but ultimately it's closing down the last 2 days. Right now we're green, but very minimal price action. That means there's not a lot of money coming into the markets right now. So this isn't just a one particular coin exchange. It's something you're seeing across the board here. Ethereum used the 72-day. Again, very little money capital coming into the market right now, very small candles. So this is something that if you are short in a coin, this is kind of where you look at an asset and say, okay, well, maybe it's getting weak. Maybe this is our time to kind of strike. This is our time to kind of jump in and take advantage of the uncertainty or it being weak. Because if the trend is getting weak, that means that it may have to go down and grab some liquidity at a lower level before it's able to come back up and retest. So this is kind of where you see shorts kind of come in to try and eat. But again, if any of that news comes out or if anything changes, you're going to see the biggest red candle you've seen in shorts as they kind of get out and kind of wait to have that opportunity again. So that is my update with price action as far as the Doge, what's going on. Let me know your guys' comments or thoughts in the comment section. I appreciate you guys for 60K. We are less than 40K away from 100. I appreciate all of you. Continue sharing the video. I'm glad you guys are finding value, and I will see you in the next one. Thank you.